And there you have it. The markets are officially closed on this Friday, August 22nd. Welcome, investors and traders. Hope you're having a great week. This is a daily candle chart of SLV, which is the iShares Silver Trust. And I'm starting off with the chart of silver because we talked about this on Wednesday. If you missed that conversation, be sure to go back to the midweek report right around the 18-minute mark, where we talked about silver, we talked about Pan American Silver, First Majestic Silver, we talked about some of the gold miners. And as you can see here, we have a very strong green candle on higher volume. Now, as I back out, I want to show you the 3-year weekly chart so you can see that as we're approaching this resistance line, which is also the channel line. Remember, when you have a trend line, which is the uptrend line down here connecting the lows, the line drawn parallel to the trend line is known as the channel line. And so if you're looking for a breakout of a channel, then you have to have volume supporting the breakout. So we are seeing an increase in volume as we approach that channel line. And the way you measure the move on a channel breakout is you take the width of the channel and then you draw another parallel line to the channel line, which makes this the new channel line. Now, if that is the case, I'm drawing off the charts here, we could see silver in the very near future up there around $45. I put a forecast out of $50 by the end of this year. I mentioned that on the midweek report as well. Hopefully you're catching those live broadcasts because they're a lot of fun. You get to interact, by the way, by putting in chat messages and comments and such, and we do read every single one of those, so be sure you catch the next midweek report. Now, in that report, I did talk about AG, which is First Majestic Silver, and it was the only forecast that I put out on Wednesday where I drew this diagonal line right here. Remember, this was Wednesday when the report went out, and I highlighted this bullish harami. You see that? So it wasn't hard for me to put in a diagonal line with the target up here around $9 because we were talking about how to trade silver on the cheap. In other words, if you don't have a lot of money in your trading account, there are a lot of precious metal stocks or mining stocks that you can get into and have some fun following the charts. So obviously that target is hit on First Majestic right there at $8.98. Now, can it go higher? I think it could. I think it could go up to test this resistance up here right around 9.5. We'll see. And if that conversation comes up again on Wednesday, we'll try to draw some new target lines out there for you. The other one we talked about was Pan American Silver, ticker symbol PAAS. And I highlighted the flag, the bull flag pattern. I'll draw that out for you, and I'll have to condense the price action a little bit here for you. So I noted this as the flagpole, with this being the flag. Now remember, on Wednesday, we had the bullish harami right there. So the other two candles that you see following Wednesday's price action were not there. And I said, if we get a breakout of the upper part of that flag, the way you measure the move is you take the length of the flagpole here and you attach it to the breakout point here. So you could see Pan American Silver going up to the $35 level, and that could be very interesting. And if you are in that one, I would caution you to make sure you're keeping an eye on the charts because this is not going to go straight up. It'll oscillate. It'll go into A, B, C, D patterns. And a D, which is what I think we're forming here, will be higher than the previous B here. And so I think that this has a lot of upside potential as well. I also highlighted GLDG as a possible candidate here for the folks that are looking for penny stocks. And this is GoldMining Inc. It is a gold mining stock. I actually found this one many months ago on that YouTube show, Redacted. And every now and then, if you watch that show, at least once a week, they'll give you a ticker symbol. I don't like when they put out 5-character ticker symbols because that usually means a stock is a bulletin board stock or maybe in some financial difficulties of some sort. So I don't bother with the 5-character ticker symbols. But GLDG came out, and this one actually went out to our members on the equity side. So our members hold this one. And you look at that green candle, that has no shadow underneath, no shadow on top. That's known as a bullish marubozu. And with that increase in volume being twice what we saw yesterday, this one is on track for breaking out of this high. If we get a follow-through high volume day on Monday, then you could see this one moving its way back up to $1. And it does trade. It trades in fractions of a penny, mind you, but if it breaks out of this high, you've got resistance up here right around the 1 to 105 area, which from a percentage standpoint, that looks like a nice little stock to trade. Again, it's a gold mining stock, but you got the range. And it does stay within this range. At least so far it has been. So those are some stocks I wanted to point out before we get into the diamonds and some other ETFs. But today, the reaction was coming from Jackson Hole. And the Fed, particularly Fed Chairman Powell, hinted at a rate cut in September. And this is what sparked a rally. Now, this is known as a Fed put. Now, what is a Fed put? It actually came about back in the days of Alan Greenspan. This is a real term. It's not made up. You'll find it in many different traders' glossaries. But it's when the Federal Reserve intervenes, typically by lowering interest rates or providing liquidity whenever the financial markets experience significant declines, or also when the markets experience the possible threat of a sell-off. Now, this is what I find to be very interesting, because when you look at Powell's comments, he talks about September, and I've been talking all along, especially to our members, about the September cycle. September and October historically are the worst months of the year. So I find it interesting that they're hinting, right? There's the hint, wink, wink, that they could possibly cut rates. So what happens is the market reacts to that and it tends to rally. So if they actually come through with a rate cut in September, to me, that just looks like a manipulative move to where they're trying to hold the markets up in usually a weak time of the year. So that's what the Fed put is all about. Now, when you look at valuations, take a look at Global Markets Investor. This is a good place to go and follow on X. They put out a lot of good data. But here's the hard truth. The NASDAQ market cap relative to the US GDP at 127%, which is an all-time record. Now, when you compare this to what we saw in the dot-com bubble, what we're seeing now is almost twice the level of what we seen in the 2000 dot-com bubble and the peak into 2000. Now, if you followed history or you were part of that, the markets dropped 50% from the 2000 highs. And it took 3 years to get to the low. So it dropped 50%. And so this is almost hard to get your head wrapped around when you're looking at valuations. And it seems as though the markets are just completely ignoring PE ratios, debt to equity ratios. They're just focused on what the Fed has to say. And of course, that is not a long-term strategy. It's usually a knee-jerk reaction that many traders take advantage of. Now, if they do lower rates, what is that going to do to the dollar? Well, the dollar is already suffering due to the Trump tariffs. And so if they lower rates, think about this now, if they lower rates, that makes the dollar less attractive. So that is inflationary. Okay, and when you look at the dollar on the monthly chart, here we are, another trading channel. The dollar is already on the trend line down here after pulling back from the channel line back here a couple of years ago. So this is the monthly charts, long term. If the dollar breaks out of this trend line, then again, you take the width of the channel, connect that to the breakout point. Where could the dollar go? Right back in to this support level down here. So this would be extremely inflationary, hence the reason why silver and gold are rallying. And so not only are the precious metals rallying, but there's also a lot of talk that in July of next year, Trump is going to make the big announcement of a possible gold-backed Treasury plan. Now, dig into this story. This John Zadeh, if I'm pronouncing his name correctly, is spot on in his theory. And take this headline, throw it into a YouTube search engine, and you'll find that there's a lot of talk. A lot of analysts believe that gold could go to anywhere between $10,000 an ounce or higher, which would bring silver obviously up to the higher levels. If you're looking at the gold-silver ratio, obviously silver will follow gold up the ladder here. But this is something you want to pay very close attention to, because next year can be a year of great opportunity, maybe some of the greatest financial opportunity we've had in our lifetime, or it could result in massive confusion and maybe even some panic by those who are left holding the dollar, not knowing what to do with the falling dollar. Remember, falling dollar, the value of the dollar dropping in relation to the other global currencies as a fiat currency, is very inflationary, because your dollar buys a lot less than it did just a year or so ago. And so that's why the precious metals are rallying right now. And I like this one. I like Pan American, like I said. First Majestic, GLDG, I like SLV, and these are the topics that we talked about on Wednesday. So again, go back to the Wednesday midweek report and get a refresher on that. All right, so let's get into DIA. We had the big move up. We have a big volume day, and this is the weekly chart. I want to focus on the monthly chart here, and you can see that we don't have a lot of month left. And we have this long stretch of green. We have 4 months of green without any red. I've already pointed out the negative divergences here on the CCI and even on the stochastic, but that is something you want to keep an eye on. If we look at IWM, you're going to look at a similar pattern, with one exception, is that even with this massive rally here this month in the small caps, we're still dropping volume on the way up. You see that? So IWM is a little bit different than the diamonds in that it's not supported or confirmed by the higher volume. And we are at, or at least reaching, a triple top. So keep that in mind. By the way, I'm not putting any upside targets on the major market ETFs. I'll take another look at that on Wednesday, as well as some of the other stocks that our viewers would like to look at. But I'm certainly not going to put upside targets right ahead of September and October. And we already have a very high percentage of our targets, but I'm still keeping the longer term targets to the downside on the major markets, especially the major market ETFs. Now, what I did today with one of our VIPs in our conference today, I added fan lines to the QQQs. Now, if you go back a couple of weeks and check out our Technical Tuesday educational videos, you'll see how I draw these fan lines. So nothing more than accelerated trend lines. So we start with a baseline down here. That is fan line number 1. When you connect the last touch of that to the other lows here, that's fan line 2. I continue to take the last touch and connect the next accelerated higher lows here, making that fan line 3. Go on, 4, 5. Now let's zoom in to fan line number 6. Take a look. Again, this is the monthly chart. We have 5 green candles in a row. This is the tech sector now, on dropping volume. Remember that. That's another Technical Tuesday lesson on how to read the volume. Volume is a leading indicator. Always remember that. It's not a lagging indicator. So if we have the volume dropping here month after month as the price is going up, and we're riding this most vertical fan line, now we switch to the daily chart to see where the danger zone is. Well, just by the skin of its teeth, the Qs close not only over that fan line, but over the 20-period moving average. So here's how you forecast using fan lines. If we get a drop on higher volume of this fan line number 6, right? 6 fan lines, more than 3 is overbought. We got 6. That's extremely overbought. Then you could expect a drop to the next fan line in the sequence as you roll that out. Now again, look at the calendar down here. If we break out below that fan line, we're now coming into September here. Here's the month of September. So this is what could happen. It's not a guarantee, but it's what could happen. Hence the reason why I tell folks, listen, we play the market from the long side. In fact, our trade of the week this week was a long position that did extremely well. But once these fan lines start breaking, you have to start reevaluating your holdings and your positions to make sure you're not too long and that you're putting at least sell stops in or price alerts to the downside to protect your downside. So that's what we have on the Qs. When we look at SPY, again, very similar. I already drew the fan lines on the SPX. The SPX has already dropped below the most extreme fan line. Let me just throw that in. It'll be easier for you to see this. So here's the SPX, and we broke out below that fan line back here at the end of July. And it's having a real hard time getting back up over that accelerated trend. In fact, I don't think it's going to happen. I think we might go higher on Monday, but I certainly don't believe that we're going to get above that fan line. Once again, I think we're going to start petering out here, lower volumes, losing that momentum, and then starting to turn into the September sell-off. Okay, so we got a lot that we've been talking about, a lot what we've been covering here with the precious metals and the major market ETFs. But now, as promised, I've been putting out the trade of the week. This week's trade of the week is Salesforce Inc. This is ticker symbol CRM, where on August 13th, this is the actual trade publication that went out to our members. On August 13th, everything is dated. The November 300 calls were trading for $2.85. Now, keep in mind, this is a report card that I use for educational purposes, and it's not a trade recommendation. At this point, it's not even financial advice. If you want to trade options like this, I would strongly urge you to take some option courses and learn about options before you get hurt, because if you learn a little bit of options and then try to go out and trade, it's like learning a little bit of karate and going out in the street and trying to pick a fight with somebody that's a lot bigger than you. You're going to get a black eye at the very least, so be careful about that. So the calls were trading for $2.85. We put the risk per share at $2.85. And what happened? Salesforce rallied. I'll show you the chart here in a moment. And these calls, as of August 19th, which is only 6 days into this trade, were up 36.8%. Now, this is the way we trade here at StickyTrades. If you're interested in learning how we do this, then come on over. We got a free 15-day trial. There's no obligation whatsoever, no credit cards. You don't need anything except your presence and your interest. It expires after 15 days, so you have to call us up. And you know how they play those games? You got to call up to cancel? No, it just expires, and then you're on your way after that. But this is the way we trade. Remember, on August 13th, this is where we bought the calls right there. You see that? I'll magnify that for you so you can see. So that green candle followed the hammer candle from the day before. And not only is that a nice green candle following a hammer candle, which is very bullish. Remember, hammer candle is found at the end of a down leg. It has a shadow that's 1.5 to 2 times the length of the body. And that's what we had the day before right here. And so we put that publication out after the higher low, higher high. So there's your pivot. And then for our members, what I did is I put a price target on that right there at 245. And what happened? It hit the price target perfectly. And then what happened? It's now up against that moving average. Now, I'm not going to put a price forecast on this now because, as the members know, whenever I start talking about a publication that went out in the past, it's more or less the stock is done, right? We're not going to trade that any longer unless it gives us another reason to do so. Now, look at that green candle and look at all this green down here. That's a long stretch of green, with the oscillators being overbought now and the CCI almost at that 100 level, which would be overbought. It's more likely to pull back from this point than to go up. Now, again, I would have to wait for the drop in volume. I would have to wait to see if it hits this gap, and then maybe there might be a put play in the making here, but not yet. We have to wait for pivots. So that is the trade of the week. That's our discussion about the major market ETFs, gold, silver, and the gold, silver miners. I hope you're enjoying this. Please make sure you like and share this video. We're building our channel. When you like it and you comment and you subscribe to our channel, that's a big one. Just subscribing to our channel keeps us on the menu. You're not just doing us a favor, but you're doing everyone else a favor, because as we build the audience, more and more people will be aware of what? A hammer candle, or a bearish engulfing candle, or haramis, and here's another bearish engulfing candle. They'll know what those mean, and then guess what? The signal becomes more accurate as more and more people follow it. That's as simple as it gets, folks. And if you like what you see here, then we'll most likely see you back next week for the next report. Have a great weekend, folks. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.